Well, now, look, last week on this program, we discussed an issue which has really stirred people up. As you know, we're witnessing interest rates heading towards zero. We raised here, and I don't think anyone else has talked about this, legislation before the Parliament, the Currency Restrictions on the Use of Cash Bill 2019. I mentioned last week I knew nothing about this till someone bailed me up at Melbourne Airport. Put simply, the legislation would ban the use of cash transactions over $10,000. Break the rules and you're in jail for 2 years. The Senate inquiry into the legislation received nearly 3,000 submissions. The majority opposed the bill. The federal government says it's intended to fight the black economy by stamping out tax evasion. That doesn't justify legislation of this kind. And as I said before, if the tax system wasn't so ridiculously punitive, you wouldn't have to worry about tax evasion. But this is low-hanging fruit. If you want to do something, and Peter and I just talked about this before the break, about tax and who should pay what, as we've said many times, have a look at outfits like this Atlassian and this bloke Cannon Brooks, who seems to have an opinion on everything, and his company reportedly earns $1 billion in revenue but is reportedly structured to pay no corporate tax in Australia. Nonetheless, legislation of this kind raises, in partnership with it, the issue of interest rates. There is still talk of cutting interest rates again, even though they're at 0.5%. The thing that is now worrying people is this issue of negative interest rates. At the moment, you put your money with the bank and they pay you interest. If interest rates go below zero, you would be paying the bank for the bank handling your money. This legislation would force you to stick your money in the bank. Is there an agenda here? The banks have just been hammered at a Royal Commission. Is the government now giving back a few $1 trillion to the banks? There are 5 central banks around the world already with interest rates below zero. Japan minus 0.10%, Sweden minus 0.30%, the European Central Bank minus 0.40%, Denmark minus 0.70%, and Switzerland minus 0.80%. Now, because of the dreadful returns currently available on bank deposits have been falling. Customers would rather hoard their money than stick it in the bank. But as we mentioned last week, according to the most current data available, as at February 28, total bank deposits in Australia were $2.12 trillion. So if your interest rates were negative, minus 0.25% on $2.1 trillion, you and I, would be paying the banks $5.3 billion just for them to hold our money. Here is a new concept we've got to get our heads around: negative interest rates. I mentioned last week that Matt Barry had written to me. He's the chief executive of Freelancer.com. He alerted us to the International Monetary Fund and a recent report called Cashing In: How to Make Negative Interest Rates Work. Work for whom? Well, the response to the interview last week was one of real concern, and people said, let's do it again. It most probably gets worse. We have asked Matt Barry back, and he's joined us here. Good evening to you. Thank you for your time again. Are you aware, you're up to speed on this, where is this legislation currently?
Well, it's passed in the House of Representatives, and the Senate has passed it to a Senate inquiry, which has come back recommending it, even though the majority of the submissions provided by the general public and others have been against it. And I believe with Labor and Liberal supporting it, it's about to be passed.
Is there an agenda here? I mean, is there a definite move by the Reserve Bank to go into negative interest rates?
Well, yes. I mean, of all the central banks around the world, there's actually quite a number of major banks, more than just the 5 you mentioned, that are actually already in negative rates. I mean, the only 5 central banks around the world that are currently in positive are really the Five Eyes countries, so the US, the UK, Canada, Australia and New Zealand. The IMF report that came out said that central banks, to fight recessions, need to drop interest rates, or the policy rate, by between 3% and 6%. And with central banks pretty much near zero or at zero, in Australia at 0.5%, there's no room to move, and so there's no firepower left for the Reserve Bank to actually lower rates. And so the IMF came out and published this report in February of last year that said that we believe that you could actually go negative. In fact, not just negative 0.25%, as you point out, but
4%.
Negative 4%. But to do that, you need to do things like potentially ban cash or do other things to basically restrict the ability of people.
But just keep it simple for people out there. Is there a move from the International Monetary Fund behind the scenes, while we're worrying about coronavirus and bushfires and drought and God knows what, paying the bills, to eliminate cash?
Absolutely, and that's why there's been all sorts of talk about banning high denomination notes, and let's talk about money laundering and the need to be able to move to e-money and so forth. There's a general trend around this, and there's a lot of excuses that are provided. But at the end of the day, it's around running out of monetary policy or the ability for central banks to actually manage the economy through interest rates.
So does that lead to? Sorry, Peter, just this one thing. Does that lead to? And you proposed this in a paper to the Senate inquiry, which I'm sure no one read. It's a very interesting reading. I congratulate you on it. But it's leading to something like a GST on cash.
Yes, the paper is actually quite interesting. There's about a dozen different measures they propose, and one measure they propose to reduce the use of cash is that when you go to the store and you pay with cash, that the GST would be higher than if you pay with, for example, Tap and Go or your card. There's also proposals, for example, to put expiry dates on cash that you would draw from ATMs. So when the cash comes out of an ATM, there's an expiry date on it, that after a period of time it's no longer legal tender. There's a range of things discussed in the paper.
Just on that, you said in your paper, you're talking about down the track, quote, a serial number lottery plan in which each year the central bank would pick a number between 0 and 9 out of a hat, and all bills with a serial number ending in that number would no longer be legal tender.
Correct. I mean, these are sorts of things that the academics are proposing around the world in various academic research institutions, and the IMF details them all in this paper on how you could potentially make negative interest rates work and moving to a negative interest rate world, which the whole world seems to be doing right now.
Yeah, look, I agree with the academic papers coming up with stupid ideas. I mean, politics is full of them and they turn up in every committee. I am not sold that there is a Machiavellian plan on negative interest rates. And I'll get someone on this week, and you might get someone next week from the government in the Treasury portfolio to tell us exactly what their plans are with this. Is it ruled in or ruled out? All of these things, right down to serial numbers on banknotes, will require legislation if they ever went down that path. But what does concern me is the taking out of cash as legal tender, basically, from the economy if it's over $10,000. I agree with you on that. But the problem the government's got, and give me another way to solve it, is gangsters and drug dealers, and we saw statistics today. We spend $11 billion in this country on illicit drugs. They turn up to the car dealership and they buy the Ferrari or the Mercedes-Benz. They pay for it in cash. And oftentimes the people they're doing business with don't declare it. It doesn't go into the real economy. It stays in this underworld, undisclosed black market. How do we put sunlight out there? How do we flush out the gangsters?
Well, I mean, that's already tracked because car registrations of exotic cars and high-end sports cars and so forth, that's already tracked by AUSTRAC and the government.
It doesn't go in their name. Right? You know, in Ireland, right? Ireland has a program where they go to the rich guy with the fancy car that they think's a drug dealer, and they say, Matt, you've got basically no tax paid per annum, but you've got this house and that car, and you do this, and tell us how you afford that. And if you can't show them how you afford it, the prosecutor doesn't have to show that you're dodgy. You have to prove that you're clean, and if you don't, you're in jail.
Yeah, I mean, the Australian Tax Office already tracks purchases of high-end assets, whether it's boats, cars, houses and so forth. So there already are the mechanisms to actually track that.
They're not catching them.
Well, they actually are. They actually are. I think they probably do a fairly good job at actually tracking down the purchase of these assets.
Not if they're selling $11 billion of drugs per annum.
Well, that'd be a lot of sports cars, wouldn't it?
Yeah, well, that's more than the stimulus. $11 billion in illicit drugs sold last year in Australia is more than the stimulus that Morrison says is going to save us.
Right. But the cash ban is not going to stop drug dealers from selling drugs.
No,
They'll still sell
I'm
cash.
not saying it is. No. Right. I'm saying it's a way to flush them out when they go to then profit from their drugs.
I think that argument that Peter's putting up has validity, but I was worried about the other argument, because to me, the Reserve Bank has moved at lightning speed to get these interest rates down to almost zero. It's unbelievable. I mean, for example, if the economy wasn't stimulated with interest rates at 2%, why the hell would you be moving to 1.5 or 0.5%? So the next step is, and there's talk about reducing interest rates, so if we get into negative interest rates, here we are paying the banks. Now, I think that out there for the public would be a real concern. Now, we could go on all night, but I want to ask you about something else. And Peter is in the same boat as me here. I mean, I knew nothing about any of this stuff until I was bailed up. Then I find out that in 2018, there were, for example, the phrase bailout, I think everyone viewing knows what bailout means. The government will bail out the banks. If the banks get in, they'll bail you out. That's taxpayers' money. Well, there was a bail-in piece of legislation passed in 2018, only 8 senators in the House. It was passed on the Voices, And bail-in means if down the track the banks get into trouble, they have access to the liquidation of your assets with the bank. Matt?
That's right. So it was Valentine's Day, actually, of 2018 that it passed in the Senate with only 8 senators present. Legislation that provides, in crisis times, if there's a bank failure, the ability for APRA to step in and take control of certain instruments that are with the bank in order to bail the bank in using depositors' money. So this is just like in Cyprus a little while ago, where everyone woke up and all of a sudden your bank account had less money in it because it was used to kind of bail out the bad debts.
That could be shares or bonds or notes.
Could it be cash in a bank account?
Yeah, it could be deposits.
Well,
so what on that day that you're talking about, what happened was One Nation were negotiating with, as I understand it, with Matthias Cormann to exempt deposits. That is, your deposits at the bank from the provisions of this legislation. While they're talking to Matthias Cormann, 8 people in the Senate have passed the legislation.
Correct. So in New Zealand, the legislation specifically says they can use deposits to bail out the banks or bail in the banks. In Australia, it comes down to the legislation says for sure that they can use hybrid securities. Mm-hmm. So these are these fancy things they sell to retirees to get high yield.
Yes.
But it comes down to the definition of an instrument under the in the legislation. It's not clearly defined. There's legal opinions that say that it does cover deposits and, for example, self-made super funds and so forth. And so...
But in any event, it's appropriating someone's property. That's what you're getting at.
That's correct.
Yes.
So, you know, we pride ourselves on watching the Parliament. I did not appreciate this. It doesn't come on the back of, say, the GFC fight we had 10 years ago and like 20 years ago. What's the rationale? What's the argument for doing this, Matt?
You have 3 choices if a bank fails. You can either let it go insolvent and go into liquidation laws, or you can bail it out, as Alan points out, where the government comes in and uses taxpayers' money to bail it out, or you can bail it in by using depositors' funds.
But what was the prompt in 2018? Like, if they'd been putting this up in 2008 when the GFC was hitting us hard, I can understand the argument. Don't agree with it, but I can understand the timing. What was the motivation? Malcolm Turnbull was Prime Minister. What was the motivation in 2018?
Well, I can't talk to you about what Malcolm Turnbull's motivation was, but around the world, a whole range of countries were passing these laws, I think after the Cyprus incident and so forth. You've got to remember that in the global financial crisis, the Australian banks were insolvent, because they rely upon foreign funding in order to actually conduct their operations. So the Australian banks were only kept alive by the deposit guarantee, which the federal government gave in and rented the AAA credit rating, and also liquidity operations where they provided $4 billion worth of cash on a daily basis to the banks.
And the other point here is that parliamentarians don't read legislation. Look, we're running out of time, but I'll just make one point, that on February 27, which is only a couple of days ago, Senator Malcolm Roberts from One Nation introduced a bill called Banking Amendment Deposits Bill 2020, which is effectively the same as the amendment that they were trying to get over when they were talking to Matthias Cormann, and it would stop this Act of 2018 from being used to bail in deposits, your money. So every one of you watching now should urge your MP to support this bill, which is being introduced into the Senate, the Banking Amendment Deposits Bill. Just a quick one before you go. Where's this heading?
Well, I mean, one thing I wanted to point out, which we haven't covered yet, is the fact that the Australian deposit guarantee only covers deposits up to $250,000, and above that, you're not guaranteed. If there's a failure, it's up to you. You're at your own risk. Together with the cash ban, your money's trapped inside the banks now. To an extent. There's the ability for future government, without having to go through formal legislation, to just make an amendment to include the $10,000 cash ban in to withdraw money from the bank itself. That could also be banned and be subject to 2 years jail, and that doesn't require actually going through the Parliament properly. Where this is heading is basically greater and greater control of your money,
absolutely,
and inability for you to actually.
Okay, well, we're not going to solve all of this, but thank you for talking.
Great.
We're not going to solve it tonight. I'm staggered about all of this. The extent to which there's any been public debate, public discussion, public information, an election campaign telling people we're going to do this, non-existent. It just sort of creeps up behind us all, and then you sort of think, what can we do?